99% of healthcare orgs use GenAI, navigating data security and integration challenges. A shocking 99% of healthcare organizations are now using GenAI applications like AI-powered chatbots and clinical development automation, according to Nutanix's 7th annual Global Healthcare Enterprise Cloud Index/ECI survey. But here's the controversial part. Despite this rapid adoption, most of these organizations admit their current data security and governance measures aren't enough to fully support GenAI at scale. 79% struggle to integrate GenAI with existing IT infrastructure, 65% face persistent healthcare data silos, and 59% grapple with ongoing development challenges for cloud-native applications and containers. While Nutanix provides a promising enterprise cloud platform across multiple continents, some believe certain AI stocks may deliver higher returns with limited downside risk. What do you think? Is Nutanix the future of healthcare AI, or are there hidden gems with even greater 100x upside potential? Let us know in the comments. Cloud computing and financial services, $205 billion market by 2028 GlobalData report insights. Imagine this. By 2028, financial services companies will be spending a staggering $205 billion on cloud computing. That's a massive leap from the $93.2 billion they spent in 2023, growing at a compound annual growth rate, CAGR, of 17%. This isn't just a trend. It's a seismic shift in how the financial sector operates. But here's where it gets controversial. While the cloud offers numerous benefits, it also presents significant challenges, especially when it comes to economic pressures. The cloud has become the go-to model for delivering and maintaining enterprise IT resources. By sharing IT infrastructure and services, companies can create a flexible, scalable, and on-demand IT environment. This is particularly beneficial for financial services providers who are under growing pressure due to higher interest rates, tighter regulatory scrutiny, and slow economic growth. By migrating to the cloud, these companies can significantly lower operational costs. The cloud operates on a usage-based subscription model, meaning businesses only pay for the processing power and storage they use. This allows them to scale their resources up or down as needed, which is a game changer in an industry where efficiency is key. However, financial pressures remain a challenge and are likely to affect profitability. While adopting cloud technology is a necessary long-term investment, it is unlikely to enhance profitability by the end of 2025. Cloud computing is essential for digital transformation, and the advantages are extensive. It can help companies modernize infrastructure, scale operations, reduce costs, improve resiliency, and build new revenue streams and services. Cloud-based systems have helped companies adapt to the rise in remote working, increased customer app use, and reduced associated security and fraud risks. It is now a question of how, not if, banks should migrate to the cloud. Ensuring a smooth, tailored, and targeted cloud migration is essential, especially in a heavily regulated industry like financial services. And this is the part most people miss. The transition to the cloud isn't just about technology, it's about strategy. It's about rethinking how you do business in a digital age. For more detailed insights and sample content relating to the report, Cloud Computing and Financial Services, Strategic Intelligence. 87% of companies boost cloud investment. LSEG report insights. Here's a startling fact. 87% of companies have ramped up their cloud investments over the past 2 years, according to a recent report by the London Stock Exchange Group, LSEG. But here's where it gets controversial. While this surge aligns with the rapid evolution of capital markets and heightened regulatory scrutiny, it also raises questions about the balance between innovation and compliance. Are companies truly prepared for the regulatory demands that come with cloud adoption, or are they simply chasing the trend? Let's dive in. The financial industry is no stranger to change, and the cloud has become a cornerstone of its transformation. The Cloud Strategies and Financial Services Survey, which gathered insights from banks, private equity firms, asset managers, hedge funds, and more, reveals a sector in flux. As regulatory frameworks like the EU's Digital Operational Resilience Act, DORA, and General Data Protection Regulation, GDPR, tighten their grip, 84% of firms have already adjusted their cloud strategies to comply. But this isn't just about ticking boxes. It's about survival in a landscape where operational resilience and data security are non-negotiable. And this is the part most people miss. Firms aren't just begrudgingly complying. They're recognizing the rationality behind these regulations. As LSEG explains, many companies understand that rules around security and resilience are a response to real, significant risks they themselves are wary of. It's a rare moment of alignment between regulators and the regulated, but it doesn't mean the journey is smooth. For instance, 51% of surveyed firms assess their cloud investments based on scalability, while 47% focus on revenue growth. This split highlights a broader debate. Should the cloud be a tool for efficiency, growth, or both? When it comes to choosing cloud service providers, CSPs, 92% of respondents prioritize operational resilience, a clear indication of where the industry's priorities lie. But here's the kicker. 47% of firms are using public cloud services for market data and pricing, despite citing the sophistication of cyber attacks as their top security concern. This paradox raises a critical question. Are companies overestimating their ability to manage cloud risks, or is the allure of cost savings overshadowing potential vulnerabilities? The LSEG survey also sheds light on who's driving this shift. 51% of respondents hail from banking, 37% from investment, and 12% from wealth and advisory. This diversity underscores the cloud's universal appeal, but also hints at varying levels of readiness across sectors. For example, banks, with their stringent regulatory environments, may be better prepared than smaller advisory firms. But is this enough to ensure industry-wide resilience? Just last week, the European Securities and Markets Authority, ESMA, weighed in, releasing guidelines for firms outsourcing to CSPs. Their advice? Adopt a risk-based monitoring approach, focusing on critical functions and reassessing outsourcing arrangements whenever risks evolve. ESMA also emphasizes the need for pre-outsourcing due diligence, including identifying potential conflicts of interest. But here's the controversial bit. While these guidelines are well-intentioned, they place a significant burden on firms already grappling with rapid technological change. Is this a step toward security or a recipe for compliance fatigue? As cloud adoption continues to rise, the question lingers. Is the shift of liquidity itself next to follow? The cloud has already transformed how financial markets operate, but its impact on liquidity, the lifeblood of these markets, remains to be seen. What's clear, though, is that the cloud is no longer optional. It's a strategic imperative, but one that demands careful navigation. So, here's the big question for you. As regulations tighten and cyber threats evolve, are firms doing enough to balance innovation with security in their cloud strategies, or are they flying too close to the sun in pursuit of efficiency and growth? Let us know your thoughts in the comments. This is a conversation the industry can't afford to ignore.